Hello traders, Gary Wagner here, just around 10:40 in Honolulu, 4:40 in New York. It is Thursday, 30th day of March 2017, and this is the Daily Report for Gold and Silver. Tremendous pressure on gold, specifically today seeing a $10, $11 drawdown, with the U.S. dollar strength the vast contributor to this most recent price decline. We'll talk about that, of course, as we pull up our first couple of charts. Gold currently trading off by about $11. This is basis most active April contract at $1242.60. The low is right around here, $1242. We're trading near the lows, and the highs, $1253 and change. Of course, we have positions, or had positions, depending on where you moved your stops, at June contracts, which is trading at $1245.80, putting it down 11. And again, we're looking at a low at $1245.30. Yesterday, I sent out a special trade alert recommending that we tighten those stops. I had two key areas you could move them to, an aggressive stop and then a more conservative stop a little bit lower. The aggressive stop was hit this morning in trading, and traders moving the stop to that area did pull a profit. Of course, we'll talk about that in greater detail as we go through a couple of charts. Net change on the day, almost 0.9%, almost a full percentage point in terms of the drawdown. When we look at silver, although silver has really had some difficulty over the last couple of days, the drawdown today is a little bit less than in gold, about 0.6%, still trading above $18 at $18.14, and the low on the day, $18.07. Traders, after hitting a price point high on Monday, in which it actually challenged or flirted with the yearly high at about $1265, the market began to stall. We're looking at a daily chart. This chart, of course, is the June contract, the contract that we had a trade in. And this is Monday's candle right here. This is that clip up well over the former resistance, but still unable to tackle this high sitting up here at about $1265. From there, we noticed that we had weakness come into the market, and even though we would have the market close slightly higher or slightly lower, we did get a series of lower highs, lower lows over the last 3 days. I noticed that we were unable to take the top out, but on yesterday's trading, what became evident to me was once we couldn't take this top out, would the market go to test support? And the fact of the matter is, with such dollar strength, and that being the predominant characteristic of the weakness we have exhibited, we did send out a special trade alert recommending that our clients actually trail their stops up. I'm going to pull up a copy of that here. This is the trade alert that you should have gotten or did get last night. Of course, we followed that with an SMS text message. And in essence, I want to kind of go through my thinking. But what I recommended was that you move your stop up, which was sitting very, very loose, below 1219 to either below 1239, and the aggressive attitude would be to tighten it very, very high to about 1248, and this way on any weakness you would go ahead and pull some profits on the current trade. Now, traders, these stops were based on a Fibonacci short-term retracement starting at just below 1200. In other words, this leg of the rally going up to 1263, which is our high here. When we do that, the first level was 1248, and 1248 was really where this cluster of lows can be seen. And my feeling was that if it attempts to break through this area, yes, it could in fact find support, but it's more likely to move a little bit lower. And then we have another level of support, which is the 38% retracement, which sits at 1239. Therefore, my recommendation was to either trail your stops up tight to just below 1248, call it 1247, or to put it below 1239, call it 1238. As I said, those that tightened the stop with an aggressive stop got out of the market with about $1,000 profit per contract. Traders taking the more conservative call are still sitting long in the market. The market is trading at about 1245.90. And the fact of the matter is that there is a pretty decent probability that this stop may in fact hold. And therefore, we would look at this as a rally, subsequent retracement, and then another leg of the rally. And whether you pulled profits today or whether you're still sitting long, in either case, your equity is protected. You're not going to lose any money on this trade, even with the lower stop, because it's right at about our entry price. Traders taking the call, of course, today, as I said, got out with a $10 profit or approximately $1,000 per contract. After Friday's stinging defeat by the administration with their inability to even bring their new health care bill to a vote, many analysts and traders thought there would be severe pressure in the Dow Jones Industrial Average and U.S. equities as a whole, because this entire Trump rally has been predicated upon the belief that he will bring transformational change to Washington, to do business in a different way, and to really ramp up the U.S. economy. Now, the economy has been growing at a steady but slow state, but it has been growing. So we do have a fairly strong economy. Dow Jones Industrial Average gaining another 0.33% at 20,728. S&P and NASDAQ, similar type gains. One thing that we do want to look at is the U.S. dollar, which continues to gain strength, gaining about 0.5% today, now at about 100.50, considering it was trading at 98.88 at the beginning of this week on an intraday low. You can see we have had quite a considerable move to the upside in the U.S. dollar. So traders, as we talked about in our opening letter, and we've kind of alluded to it all week as we've cited the Kitco Gold Index, I believe, on 3 of the 4 days this week, the dollar found some solid footing. It had been trading under pretty dramatic pressure, considering it was trading up at around 102 and then began to lose tremendous ground, actually trading below 99 on the dollar index. And 99 on the dollar index is a 50% retracement, and it is a retracement really from the move of about 94.5 up to these tops here at about 103, just shy of 104. And so we had pointed out that this was a potential place for the dollar to find support. In fact, it did. And you can see the last 3 days, this is that dramatic move that has really depressed gold and silver pricing over the last 3 days, moving up solidly and now tracking over 100 at 157. We now confirmed that major support is at 99. Minor support is at 100. That's this level right here, and we have had an effective close above that. Now, above that price point is the 23% retracement, and that comes in at about 101.50. And traders, along with this solid performance in the dollar, has been a solid performance this week in U.S. equities. Draw your attention to the chart we've just put on the screen with the Standard & Poor's index on the bottom and the NASDAQ composite on the top. But when we look at the 50-day moving average, which comes in right here, you can see that although the market came down and tested that, this again is Monday here, it bounced off of that price point. And the same can be said with some certainty or truth to the S&Ps. Traders, as I said, we did send out a recommendation to move stops up. For traders that took the aggressive call and moved their stop to below 1248 based on this 23% retracement level, effectively you are out of the market and out with a small profit, about a 10%, actually a little bit more than that, considering the margin's about $7,000 per contract right now. So you gained about $1,000 on the trade, maybe a 15% gain on this particular trade. For traders taking the more loose call, I should say, or conservative call, in which your stop is sitting at around 1238, you are still active and in the market. Should that stop get hit, you will get knocked out at a push, maybe with $1 worth of profit, but nonetheless, effectively a push. And if it holds, we would hope to see this market move much higher. For traders that are stopped out, we will announce when the next move is, and we will also work with traders that are still maintaining their current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.